Good Thursday to you, everybody. This is Lee Gaus coming at you again from the offices of International Futures Group and EFG Group here in Chicago. And it is Thursday, which means we're going to be taking a look at a couple commodities that may be close to reversing their trend, and something that you may want to keep your eyes on, along with an examination of some commodities that did reverse a trend and what it's meant. Now, the LAWG 647 model, upon which all my stuff is based on, determines trend reversals on a Thursday close, on a weekly close. So we're going to be taking a look at where things close tomorrow to determine if we have a trend reversal. And the first commodity we're going to be taking a look at is the gold market. Now, the gold market will reverse to bullish on a close at or above 1133.50 tomorrow. That's a close tomorrow on Friday at or above 1132.50 to turn bullish. And just before coming in here to film, gold was trading at 1151. So it's already trading above the reversal point. The question is, can it maintain that premium, or a premium just above or at 133.80 133.50 in order to reverse the trend? The other commodity we're going to be looking at is silver. The December silver needs a close at 1552 or higher tomorrow in order to turn into a bullish trend. And prior to coming in here for filming, it was trading at 1509. Now, how about that copper market? We talked about copper a little bit last week in terms of a commodity that that bared watching. Copper was close to throwing us a reversal signal, not terribly close, but was getting closer. And sure enough, what happens is that starting on Monday through today, copper breaks 17 cents a pound from where it ended up Friday to its lowest point, and reaffirmed the bearish trend. That was quite a move for for basically 3 days, a 17-cent drop in price. Now, the commodities that I do want to take a look at in terms of what happened when the trend turned, and I want to do this essentially because you may be asking yourself, why are you telling me where the trend turning points may be? Why is that important? Because they're not always right. We know that. I've acknowledged some mistakes in the past, or some errors in the past, where we saw the 647 model give us a reversal, only to a week or two later go back to the trend that it had negated just a couple of weeks or a week earlier. But then we take a look at the cattle market. Now, if we take a look at from the time the cattle market turned bearish to the low point today, the October cattle have fallen over $19 a contract. And the feeder cattle, from the point when it turned bearish to the low point today, was $29 a contract. And if we take a look at the hog cattle spread, and I've been talking about this for months as a trade that bared watching, that's something that very well could give us a dynamic move, because in my view, in my opinion, the cattle hog spread was so far out of line. And what has it done since it reversed to being bullish hogs, bearish cattle? It moved $22 a contract. Folks, in every one of those instances, like the cattle is like an $8,000 cattle, profitable move of $8,000 in cattle, almost $10,000 or $9,000 in the feeder cattle, and $22. You take a look at the cattle hog spread. I mean, you start taking a look at those. It doesn't happen that way all the time, and I don't want you to think it does, but because there are times when we get signals in which there is no follow through. But when you see the type of follow through we can get once the market keeps moving and we respect the trend change, it's at least worth watching. Now, we're coming up to this Friday. If we go bullish gold, should you go long gold? I don't know. That's up to you. Will we put out a recommendation to go long gold? Our customers will find out if and when we do it. But I think these are the reasons I give you this is why I tell you where the reversal points are at. Because if and when we hit a runner, it can be a big runner. And the cattle hog and the feeder cattle move is not a rarity. It's happened like this before. So folks, I hope this has enlightened you a little bit. Watch the gold market, watch the silver market. Also continue to watch the cattle market, hog market, and feeder cattle market. Understand that trading futures is indeed risky. Understand the risk that you are assuming when you trade futures, option on futures, or spreads. For further information, you can go to www.ifgfutures.com. This has been Lee Gaus again here in Chicago, wishing you a great trading day tomorrow and a good weekend.